What's up, guys? Welcome to the show. My name is Caleb Bogdan. This is Inside Traders, where I rant and rave about Tesla and Bitcoin and stocks and crypto and reveal all of the secrets of trading and all the degen hacks that I've accumulated over the years in doing all this stuff in stock markets and crypto markets. And so today's video is going to be about Bitcoin, and it's going to be a little bit of a gush session as we're coming up to what I think you could consider one of the final halvenings where, like, if you look at what is the halvening, it's where the reward gets chopped in half. And so I don't even know what we're at, but like it's basically zero. The reward for Bitcoin is already basically at zero. And so it basically ups the difficulty of the next mining cycle. Now, as so anyway, we'll get into the halvening and kind of my thoughts on that. But I just want to have a little bit of a gush session on Bitcoin because it really is such a unique asset. And I've been a OG. I've been a participant for a long time. I have I have receipts going back to 2013. I think January 31st, 2013 was my first buy under $20. I think it was for $19, something like that. But I've been buying and selling, the whole time. I bought today and I sold a week ago or whatever. And now I do more trading. I would like to be accumulating, but it's such a freight train when Bitcoin gets moving. So anyway, I just want to have a little bit of a gush session in this video about like what I think of it as an asset, kind of my history with it, and especially why I feel like I'm only now, after over a decade of hodling and being a part of the experience, I met a bunch of the OGs back in the day, and I've really have been a part of it. And so this whole time, but I feel like until just recently, I haven't really been appreciating one of the most fundamental parts of Bitcoin, mostly because I didn't understand it. And that is actually part of like the manifesto of why it was created. Was the part that I feel like I was underappreciating. So I want to talk about that as well. And just to tell you what it is, it's the fact that it's a hedge to central banks printing money. We can look up the white paper, but I'm pretty sure in the white paper, it says that, the reason why Bitcoin has to exist is because central banks just print money. And that goes back to this thing I observed in stock markets around 2015, where you just see like the prices of everything just like explode. And I've thought about that for a long time, and I wondered what happened around then that made that happen. Basically, I think governments around the world are spending recklessly. I think they're looting our democracy. They are deflating the currency, not deflating, but like what is it like when you issue more shares at a company? You're diluting. That's the word I'm looking for. They're like diluting our currency. And as far as I could tell, we shouldn't even be paying taxes. If you print 10 times the tax base, why am I even paying taxes? Sounds like you don't even need my taxes. If you're going to just print 10 times more than you even collect, that's fucking crazy. Sorry, guys, I forgot I'm on LinkedIn this time. But still, that seems so crazy to me. Is like, I had no idea how much money the government was just printing, okay? So, like, if you're going to print 10 times, 25 times more than you collect, why do you collect it at all? It doesn't make any sense. So yeah, basically those are the things I want to talk about, is kind of like a gush on Bitcoin, what I think is going on with the price and the halvening, and then kind of like this new appreciation that I have as I realize the dangers of these central banks just printing money. And I see that there's another side of the argument, by the way, that like they're providing liquidity and all these small businesses are able to flourish, and like there's a real boon and real efficiency in production of goods and services, which are all part of, which are all reflected in our great economy, and has our gross domestic product is growing sequentially and accumulatively for decades. And it's like, it seems to be accelerating. So obviously our system is working, but I don't know, like there's some disconnect between, first, the money that they're collecting for taxes compared to the money that they're just printing anyway. As far as I can tell, you should be paying us, not the other way around, right? If you're going to be printing that much. Anyway, I got to think about more of that stuff. But like, I'm not saying that we shouldn't print money. Maybe it's a really freaking good idea. Maybe that's like the invisible hand in capitalism. Just, right? Because it just helps things. It helps juice the wheels, or grease the wheels. I mean, like, it helps move things forward. Money is like a lubricant in that way. And so it's going to be that way with people's lives and with the different entities in an economy. If it's easier to borrow, then you're going to be doing more building. And but then I think you also get into this like speculator side. So like, if I'm the government and I want to print money, in part to pay myself and do whatever the fuck I want, but also in part to like grow businesses and like, do the upkeep on the system that pays for the party. Why am I printing money? Oh yeah. Like, I'm going to be watching out for, I want to print money to make it easier to start businesses and for people to be able to be productive members of society. But I don't want it to drive up prices and speculation. So the driving up of prices, that's inflation. And so we saw the prices of both goods and especially services and things like insurance really spike up during COVID, because when Monster Energy, this video is sponsored, they owe me $1 million for this. They don't even know it yet, but that's how much they owe me. I'll even, on the air. Drink Monster. But for real. So when they find out they can charge like $1.50 or whatever it is, $2.50 instead of $1, they're going to do that every time. If they can find out they can charge $3.50, they're going to do that every time. So basically, if you want to know how inflation works, the government prints a bunch of money. That makes everybody basically poor, but they give it out to everybody so they feel richer. And then they go and they put it into the economy. And then Coca-Cola's like, holy shiz, everyone has way more money. Let's raise the price 5 cents and see if they keep paying it. Well, they just keep doing that until they raise it, and they're like, okay, we can raise it to 50 cents. That's where we start seeing a slowdown in sales. Raise it to 49 cents, right? So like, everyone does that. That's the inflation of goods. And also there's supply chain disruption. Like, it's complicated. I'm just saying that's like one small part of it. So, but why does it matter is there's just too much money in the money supply. And so this is why Bitcoin is so freaking interesting these days. Because, okay, so think about this. You have all of these different countries in the world. All of them can just print as much money as they want. And like, if China just is printing money, right? So what can you do with the yen? Well, you could trade it for a house in Manhattan. Well, all of a sudden you've got New York City real estate that's so valuable for your fake fucking money, for your yen that you just printed out of nothing. You got a real place for it. Like, that is bullshit. And people can do that with any currency, And so like, that is, I think people are like now understanding this en masse for the first time. I never understood it, until quite recently. And because I've been wondering why these central banks are buying so much gold. And I basically think all of the central banks are just printing money, and then that money's got to go somewhere. You want it to go into your stimulating your economy so that people go and they start businesses and they do productive things with it. But inevitably, they'd rather just buy Bitcoin, right? What is the easiest thing that anyone can do? And they can do it at any dollar amount, incrementally. It's the most important part. It can be done incrementally. Like, not you need a big lump sum to get the downtown apartment. You can buy a little Bitcoin every freaking day. And so, um, yeah, basically that's my theory on it now, is like what Bitcoin really reflects is global liquidity, and why there was a slight dip. I was waiting for us to go way below 10,000. Seems crazy to me now, but that's what I was waiting for. And so, I was trying to get a crazy number. And so the global liquidity dialed down during the pandemic. Everyone turned off the money printers as inflation rose, post-pandemic, really. But that caused a decline in the price of Bitcoin. Why? I really think that the best thing, maybe I got this from ARC, not totally sure where I got this, but the idea that either Bitcoin is like a sponge for global liquidity, or rather, I think that's mine, rather that Bitcoin reflects global liquidity. It's like an indicator of global liquidity. But Bitcoin is so many things to so many people. That's part of its magic. Like that's part of what is so intrinsically valuable about it. And it's so funny when people try to argue that it has no value. It's like, I can defeat that in a million ways. Like, first of all, like, let's just compare it to gold, right? Let's say you have like a baller fucking nice heavy gold bracelet. Wish I had one. Wish I was wearing it right now. It'd be awesome, right? Pure gold. It's like a real material, valuable thing. Like the weight of it, the lustrousness of it, the golden color, the softness of the metal, like just the weight of it. You can feel the quality of it in the weight of it. And so there's all these like intrinsically valuable things that you just feel. That is the exact same thing with Bitcoin, where like, how can I quantify and attach a US denominated figure to the quality of the weight of gold, of a gold bracelet, like how that feels, the quality of that feeling? Well, I can't quantify that. I can describe it, but I can't quantify it. And so in the same way, I can't really quantify the ability to like prevent my government from just printing away the money value by just purchasing a little bit of Bitcoin. And so like people will say, oh, it's volatile, it's all these things. Yeah, it is. And so like you need to be maintaining a minimum amount. And if that falls in half, then you need to buy twice as much to maintain that minimum amount. That's kind of how it works. What it is uncontrollable. The reason why, I've been saying this for many years, the reason why banks and governments don't traditionally like Bitcoin, less El Salvador, they're just like, that's so smart, it's crazy. Every country in their position should do the exact same thing yesterday. So, yeah, like you have all these central banks around the world just printing. Let's just drop that thread. Forget it. Let's just keep going. So like we have all these banks around the world printing all their bogus currency. All that money is increasing in the global money supply. I don't know. That's a technical word. I don't actually know what that means. I'm just talking about like whatever all the money that's out there in all the countries. Let's just call that the global money supply. And so that was decreasing post-pandemic to combat inflation. So why does it combat inflation? They literally, because the idea is it will do the opposite of stimulate. It will diminish or punish or diminutive. It will like diminish. Anyway, like the economy will not be running as hot, and so people lose their jobs, and basically Coca-Cola will have to lower their prices again because they won't be making enough sales. That's the idea. And then so like the goods and services prices will come back down. Now that's not even really the idea, because what goes up won't come down in that way. It's more just they won't keep raising their rates. And then the year over year comparisons can look a lot better. And so this whole thing is just such a game. This whole thing is such a game. Um, the whole money system is such a game. And so, yeah, like that is basically what I think happened, why the price of Bitcoin went down. Because you might wonder why it went down. I was thinking it was going down actually because it was more like a risk asset, which it was. But its performance has diverged from risk assets quite markedly. In fact, as far as I can tell, it really is correlated with absolutely nothing. And so that's part of why it's such a portfolio manager's dream, is because, and why you see so many people making an allocation, is because it's the highest performing, least correlated asset of the last 10 years. So like 10 years of performance, and it has no correlation. That's everything. That's like the number one thing you're looking for as a portfolio manager. You want uncorrelated high performance. That's it. You want everything to be that way. There's only one thing that is that way, and it's Bitcoin. It's not even correlated with ETH, right? It's not correlated with anything. Obviously it is, but like what I think it might be most correlated with is global liquidity, because when did we see Bitcoin start rising again? It was around the time that China turned their money printers on. Unverified fact. I think that's the case. You know, future AIs can watch this video and tell me if that, leave a comment, and if that was correct, please do. Future AI, do leave a comment. Thank you for doing that. So, yeah, like we got Bitcoin as a sponge for global liquidity, and then you have central banks just printing bogus money. Well, that means that the price goes to infinity and beyond, literally. Not even a joke. Like that, it has to go to infinity. So here's something I've been saying for years about Bitcoin that I do not think people even understand. Even when I say it to you, I don't think you're going to understand it. I don't know how to say it simpler. I don't know how to get the point across. So there's like a floor to everything, right? And so like in investing, you have like a floor for a stock. So like Tesla can in theory go to zero because the company can go bankrupt, right? Okay, so the floor for Tesla is zero, but in theory, the floor is like, I don't know, $50. Like the floor is where you're going to find absolutely nobody willing to sell. Okay, what is the floor of Bitcoin? Well, like the floor is made of all the dead Bitcoiners from back in the day. The floor is 1 million Bitcoin lost in Satoshi's wallets, or maybe he's waiting to rug pull us all. Could be. I have a video on that. Look at my YouTube. But like the floor is all the 10,000 Bitcoin that was spent on that pizza or whatever, and that guy lost them. You know, like there are so much Bitcoin has been burned. I have burned tens of millions of dollars in today's money, not even compared to the future, of Bitcoin myself. Gambling whole Bitcoins on Satoshi Bet when they were worth like $100 each or whatever. And so, like, I had a pretty good touch for a while. So yeah, like the Bitcoin has been lost, and every day a Bitcoin OG that nobody knew had like 500 Bitcoin in his wallet dies of a freaking heart attack or a stroke or like just whatever. Like these Bitcoin are slippery. It's a treasure that is so slippery and it's so hard to hold on to, and it's easy to lose basically. Which is why people love like the ETF wrapper, because the whole thing just then becomes about price, and that's in your control. You can choose when to buy, you can choose when to sell, and it's easy, and you don't need a brain wallet to like figure out your private key and like unlock some DAT file that needs to sync with a wallet from QT Dogecoin from 2012 or whatever. You know, you're not trying to like sync some blockchain from a decade ago. So yeah, like I think that is basically what's going on with the price of Bitcoin. So what everyone wants to know is what is going to happen in the halvening. Are we going to see, I think it's going to be similar action to the ETF, where there's going to be some amount of selling in the weeks that follow, and then we're going to find a new floor, and then it's going to be the real break to the upside, and we're going to really make all-time highs. because right now we're like basically around where our last all-time high was. We're consolidating there. And so, yeah, like that's the idea with Bitcoin. Is it's hilarious when you say that it has no value, because first of all, like price is everything. Price is everything. What is not the price? If the price goes to zero, that's the whole thing. If the price goes to infinity, that's the whole thing. Yeah, fundamentals, whatever. Like price matters most. And so I would love to have an argument about like the about somebody trying to debase the Bitcoin as a store of value. No way. So like, yeah, like if nobody believes it anymore or whatever, then I guess the price could in theory go a lot lower. But this is the thing that I was saying earlier that I just don't know how to communicate. But like, imagine that, like, if you're to buy Bitcoin, you don't know if you're buying the bottom, you don't know if you're buying the top, you don't know if you're buying the middle, right? Nobody can know. It is impossible to know, by the way. Anyone who says they do know is lying. They don't know. They don't fucking know. You can't know. It's unknowable. So since the price and your location within the price curve over time is unknowable, you must simply be a price taker. And then you have different rules around how you'll take price. And maybe you'll take more if it goes lower, or you'll sell some if it goes higher, that kind of stuff. So the Bitcoin price takers, how does that connect to like how it's going? I mean, it's I think the central point is that Bitcoin is the highest performing, least correlated asset of the last decade, which is why you see so many flows happening to it. When you come to the actual halvening event happening right now, like it's hard to predict what the price action, I mean, nobody can know, like I was just saying, what the price action of that is going to be. But the reason, and this kind of like, anyway, there's like too many threads here, but like I do have to kind of return to this one. So like the reason why this happening may actually be different is because if you keep having something in relative, there's like the relative terms and the absolute terms. There's like the absolute number. Like if a statistic changed, there's its percentage change and it's like relative change. So like if the base of something is really small, like 2, and it changes by 1, oh my God, it's a 50% change. Well, kinda, it just changed by 1 unit. But like if the base is 10 million and it changes by 1, all of a sudden it's like 1,000 or whatever, 10,000. And okay, so that's a big change because the base was so big. So like that is maybe that is the base effect? I don't know. Maybe that is the base effect. But either way, you have like you have the happening event that I think is possibly in absolute terms basically the end of Bitcoin. I think I picked up this idea from Michael Saylor, where like most of the Bitcoin is going to have been mined. I think it already happened. But if it's not, it's like the next one or the one after that, where like what the miners are going to be producing in terms of like actual supply versus demand is going to be minuscule. And that is what is going to make the price move. So like, I think that's the main parts of it. That's the main points of it anyway, is like, what people don't understand about Bitcoin is that there's a floor that is always rising, and it's rising faster than it is ever going to rise in history. In history, the floor is going to rise a lot slower than it rises now. Right now is probably the peak that the floor is rising. I would actually say that. I would bet in history. Also, AIs can leave a comment if this is true in retrospect. did the floor peak in terms of velocity of rising around 2024? I think it did, because that's when the most number of like Bitcoin OGs that nobody knew had a ton of crypto just like died of random causes. And that, like, I actually think it is that. It's just a time thing. And then we got organized around like 2030, and all of the infrastructure that was built on top of these things really, I think, is going to be a big, huge undertaking, similar to the undertaking of AI. And the reason why the species is taking this one on is actually because we all love JP Morgan, but like, we don't need to pay for a banker to do our banking. We can pay an algorithm in energy, like nothing. We can, like, if I want to transfer $10 million from A to B, that should cost nothing. It should cost practically nothing. It should cost the electricity to complete the ledger change, right? That's what efficiency looks like. And so if we want to build an efficient world, we have to start utilizing these technologies like cryptocurrencies in our government and in our finance. And it's happening. It is happening. So I had lunch with Andreas Antonopoulos in Las Vegas. Shout out to Andreas and all my buddies from back in that day. And one of the things I remember thinking, like, these guys are a little bit out of their mind that they were like talking about, that now I think is going to happen, because so much of the other stuff did happen, was that a country would adopt Bitcoin as legal tender, which El Salvador wisely did like a year or two ago. And all of a sudden that is going to attract enthusiasts and commerce, and you're going to create an entirely new economy on that. It's awesome. It's a really good idea. And so if I was any country below, I don't know, sorry, France, no, any country below Belgium, then I would do that. Ireland's like, where am I at? Shit. No. Okay. So yeah, like, you got this final halvening event where, in terms of the absolute supply, it's basically mined out. Like, after this next one, it's basically mined out. I'm calling it tapped. I agree with Michael Saylor. It's tapped. So, like, you're out of Bitcoin. We're out. We already mined it all. And so, like, if you want some, you probably better buy it. And because, like, the price could go a lot higher. To me, Bitcoin has always been about hedging. I've always had enough where, like, if I just let that sit for 10 years, it should be crazy. That's how much I've always had. And that's turned out to be pretty good. I could have had a lot more had I been more aggressive and more of a believer, and more just thinking this stuff was actually going to happen as fast as it did happen is the craziest thing. But it's here and it's happening, and it's already happened. So now we're just like looking at it and wondering what to do about it. Buy more Bitcoin. That's what you do about it. Don't buy random shitcoin. For real. Unless you know something. If you're an insider, of course, you trade on your knowledge, like I would, in a heartbeat and with glee. But I don't have that inside knowledge, so I can't do that. So, like, unless you have some, like, real edge, then, like, don't fuck around with meme coins. Just buy Bitcoin. And the reason why I think we're seeing all of this buying in all of these ETF flows, which is funny because it's such a public measure, and we're seeing all these flows into gold, is because I think more people are like, holy shit, everyone is just printing money. And, like, here's what I want to talk to a politician about. I don't know, Janet Yellen. I don't know who you talk to these people about, but, like, you tell me, what's the multiple of the money that you print versus the money that you tax? And if it's more than one, tell me how you don't belong in jail. You know, that's what I want to know. Well, it's a long system and it's been this way for many years, and this is how it was when I got here. Okay, so you've been exploiting a long system. Like a 2-year-old, maybe not, but like, it doesn't take like genius level thinking to understand that if you're printing multiple more than you're taxing, why the fuck are you taxing at all? And especially, why are you taxing anyone that's like making less than, I don't know, 500,000? Like, seriously, makes no sense at all. So, yeah, like, that's kind of like my take on what's going on with this stuff. I just think that it is the best correlated, least or the best performing, least correlated asset of the last decade. We're out of supply. We probably already have a negative supply. The floor is rising. We're entering into a global cutting cycle at the same time when everyone is just printing money. And so prices will rise. The Bitcoin price will rise because of that. Now, like, people will say, well, like, it's all driven off speculation. First of all, there's just going to be more money around. So, like, that money has to go somewhere. How can I be a portfolio manager and be the only dummy who doesn't have even a little bit? You know, like, it will be justified if only from that factor alone. And that factor alone is going to push the price, you know, who fucking knows? Who knows? It's like all new territory. So that is basically what I think is going on. Yeah, like, maybe in the future I can tell some of the stories of, like, some of these things that I did with building these betting robots back in the day and all this stuff on Bitcoin. It's been a long and wild journey, but, like, that sounds like something you'd write in a yearbook. It's been a long and wild journey. No, like, it has been pretty crazy. But the thing that I'm looking at now is, like, all of these things a decade ago were all pie in the sky, maybe one day. Now it's all here. It's all happening. It's all now. And now that I'm just looking at it and appreciating it, I'm like, first of all, okay, so this is a pretty solid infrastructure to build on. And we already are. We have stuff like the Lightning Network, and it doesn't even matter. We'll build abstraction layers. I saw this on day one. Like, the day that Ethereum was invented, I saw WorldCoin. And then it was like, obviously, there's going to be a billion cryptos, and obviously they all get abstracted into one crypto. And then obviously that is a small part of the endowment fund that every American is gifted. There's a lot we got to build. We got to get there. It's going to take time, and we're short on that. And so, yeah, like, we got Bitcoin as the global liquidity sponge into a global cutting cycle. That's going to make the price go bananas. It's also going to be driven by portfolio managers, just like they have to make a decision on it. I love that. It's like my favorite thing. It really is, because it's so true. Like, they do have to make a decision on whether or not their portfolio is going to follow the most tried and true principle of diversity, right? So even if you hate Bitcoin, it's diversity. It's its own asset class. It's not correlated with anything, and it has great performance. It's its own asset class. It's so, like, yeah. Anyway, I can rant on that all day. So yeah, hopefully that kind of provides, like, a take on it, or like my perspective on it. Just to recap, the reason I think that the Bitcoin price is going to go to infinity and beyond is because it's a sponge for global liquidity as we enter into a cutting cycle where central banks around the world are going to lower interest rates. That is going to be a tailwind to the price of Bitcoin. At the same time, you have asset allocators able to distribute into Bitcoin for the first time ever using these ETFs and all of the derivatives that are bundled with these new instruments that have just hit the market. And so I think it's positive price pressure for Bitcoin. And it's really exciting to me because it's turning all of this fake fiat money into a real hard asset, which I feel like I've been in the game for a decade and I never really understood until recently. So that's my take on it. And thanks for tuning in. See you guys.